Welcome. Today we are going to make a demonstration on how to compute different interest rate conventions using the hp10bii plus financial calculator. This calculator is useful for financial mathematics, statistics, investments, and the likes. If you are in finance course, it comes in very handy. As you can see on the screen, I already have computed the rates in Microsoft Excel. Then we'll see how to use this calculator to get similar answers. We are going to see how to move from nominal interest rate to effective interest rate using discrete compounding, annual compounding such as semi-annual, quarterly, monthly, etc., as well as continuous compounding. Now let us turn our attention to the calculator. We are going to use these functions in orange as you see on the screen on the calculator. It is a very easy calculation that you shouldn't struggle with in the exams or any daily use. The example that we have on the screen uses 10% as nominal interest rate. What you have to do on your calculator, the first thing after you put it on, is to see that it is set to the correct rate of compounding or number of compounding per annum as the question requires. On the screen we see the example that we are going to use is using semi-annual compounding, but our calculator is set to 1 payment per annum. We just have to punch 2 second function PMT to move to 2 payments per annum. From there, it's a simple calculation. You punch in 10 second function, you put in as a nominal interest rate, and then you punch in 1 second function, and as the example that we are using only shows 1 year calculation. The next thing that you do, without cancelling anything on the screen, you use second function EFF. It will give you the 10.25 as the effective interest rate. We can use 15% as another example as a nominal interest rate with the same semi-annual compounding for 1 year, and then this is the answer that you see. For instance, we can also go from 2 payments per annum to 3 payments per annum. For you to do that, you punch in 3 second function PMT. This is where you see 3 payments per annum. And then we use 10% again as our nominal interest rate for 1 year. And then effective interest rate is 10.33 as you see in the screen over there. We can also use continuous compounding calculations with this calculator. We can either use the epsilon or the Euler's number, which we have here on the calculator, or we can still trick the calculator, move from 3 payments per annum by entering a very big number which can approximate infinity. Now we have this big number which is very big, and then we can still use the calculator as though we are using a semi-annual or single compounding. For instance, the example that we are using right now, we see on the screen right now, we go back to 10% as the nominal interest rate for 1 year, and then the effective interest rate will be 10.5152. That is the example, that is the same answer we see on the screen. Secondly, we can use 15% like the other example above, and then the effective rate will be 16.18 as you see on the screen. However, you can use this button which is already preset as exponential. In that way, you will not have to use the payments per annum function. This is very simple. We can follow the equation that we see on the screen right now. 10% is the nominal interest rate, so it will be 0.1 second function epsilon minus 1. It's very easy, 10.5171. We can also go back again and use 20%, which will be our nominal interest rate, 0.2, second function e minus 1, which is very easy, 22.14. That is the same answer that you see on the screen. We can also use the natural logarithm to move from nominal interest rate to effective interest rate and back again. For example, the equation that we see on the screen uses 10% again as the nominal interest rate. But then if you are given an effective interest rate of 10.5171 and we want to convert it back to nominal interest rate, using the equation on the screen, it's very easy. It will be 1 plus 0.105171 answer. Then you invoke the natural logarithm, it will give you 10%. We can do the same for 20% as we have it on the screen, 1 plus 0.2214. Then second function, that will be the answer as it is on the screen. Let's move to a very short example which you can have in the exam. It says you have 5% rate that is compounded semi-annually and you want to calculate the corresponding continuous rate. What you have to do, you punch in 0.05 because it is compounding semi-annually, divide by 2, and the next thing you add 1 as you see on the screen. Then you invoke the natural logarithm, you multiply by 2. You just follow the calculation on the screen. It will give you 0.049, which is 4.9%. Okay, thank you very much for watching this video. If you like it, please hit like right now below, and remember to subscribe to our channel to view other videos as they come. Thank you.